Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in accounting, and our topic today is lease classification criteria according to the US GAAP. So, if you are not in the US, international accounting, we don't have these classification criteria anymore. But here in the US, we already have, and for accounting purpose, we classify lease as follows. So lessee is the one who is, other quote here, purchasing the asset. Lessor is the one who is, under quote again, selling the asset. So we have finance lease and operating lease. For the lessor, the finance lease, it is sales type lease. And then this sales type lease, we can have profit or not. Okay. How does it work? How do we classify between finance and operating lease? So a lease is considered a finance or sales type. Finance for lessee, sales type for lessor. If it meets one or more of five criteria. So we need to meet only one, not all five. One, agreement specifies that ownership of the asset transferred to the lessee. And it is a finance lease. It is just like a purchase. So what is the difference between finance and operating lease? Finance, you consider it in a transaction similar to a purchase of equipment. Operating lease, you are renting the equipment or the assets. Okay? So the second one, the agreement contains a purchase option that the lessee is reasonably certain to exercise, or bargain purchase option. For instance, I am leasing a car. The lease is $30,000. And at the end of the lease, I can purchase this car if I pay $500 more. Wow, of course I will purchase it. So this is a bargain purchase option. Number three, the lease term is for the major part of the remaining economic life of the underlying asset. For this car, the the useful life is 7 years, and I will pay the lease for 6 or 7 years. So it is the major part of the remaining economic life. The present life of the lease payments equals or exceeds substantially all of the fair value of the underlying asset. This vehicle, this car that I am purchasing, if I would purchase it in cash, I would pay it $85,000, and the present value of the lease is 25, 26, or 24.5. So it is equal or exceeds substantially all of the fair value. So okay, I'm purchasing it. I'm not renting it. Five, the underlying asset is of such a specialized nature that it is expected to have no alternative use to the lessor at the end of the lease term. It is so customized car that no one else will purchase it. There is scarping all over the place and we cannot remove it. So it is only for me. For instance, on January 1st, 2020, let me put myself over here again. On January 1st, 2020, Scarping Corporation leased production. Scarping Corporation, remember, it is my fake company. Leased production equipment from First Lease Corp. And First Lease Corp purchased the equipment from Santiago Corporation. Santiago is the last name of my wife, so it's her fake company, at a cost of 479 and 79. The lease agreement specifies 6 annual payments of $100,000 beginning January 1st, 2020, the beginning of the lease, and at each December 31st from 2020 through 2024. The 6-year lease term 2024 is equal to the estimated useful life of the equipment. First lease routinely acquires electronic equipment to lease to other firms. The interest rate in this finance arrangement is 10%. So here, we don't even need to bring these six payments to present value because the 6 year lease term is equal to the estimated useful life. So it is the number three here. So we have one yes. So we don't need any other yeses. But let's move on. Uh, does the agreement specify that ownership of the asset transferred to the lessee? No, we have no indication of that. Contains a purchase option? No. However, the number three, uh, is the lease term the major part of the expected economic life? Yes. Is the present value of the minimum lease payment equal to or greater than substantially all of the fair value? Yes, it is exactly the same, the present value. And by the way, if you have problems on finding present values, we have a video in our channel and the video is in our video description. Does the asset have no alternative future use? No. So we have two yeses and three nos. It doesn't matter if the number of nos is greater than the number of yeses. We only need one. So because at least one of the criteria is met, this is a finance sales type lease. So it is a finance lease because only one of the five criteria was met. So we have two here. So wow, that is more than enough to be classified as finance lease. Okay, guys, that's it. Please subscribe our channel. You will be the first one to know when a new video arrives. Also, like our Facebook page, Accounting Hub by Dr. Scarping. If you have any questions or comments, leave it here or email me at jscarping@gmail.com. Thank you for watching this video. Have a very nice day and God bless you.